All right. So I would like to welcome all of you and thank you so much for joining. And I'm going to ask Miss Larissa, she's on with us. Just keep an eye on the people, sweetie, because I can't probably see everyone. But I also want to give and not introduce, I was about to say invite, but introduce my manager. He's our operations manager. His name is Mr. Daniel Lewis. And so he is on with us to provide any additional help that we might need. So I'll just let him greet you guys.
Yes, hello, and thank you, Tamika, for letting me hang out with you guys. Happy to be here, and hopefully I can learn something too, and or provide some support.
So if you'll be learning anything.
Well, you always, yeah, there's always the opportunity for learning.
Always, always. Okay, let me do a share screen so I can pull up the presentation here and we will go with it a little bit. Can y'all see my screen okay?
Yes.
Okay, and then of course, I don't mind if you all shout out a question or put something in the chat. Stop us if you have any questions. So with VA home loans, you can purchase, you can refinance as well. Let's see if it's gonna let me go to the next slide. Oh, there you go. You guys know who I am. All right, so a VA home loan, it is actually guaranteed by the U.S. Department of Veterans Affairs. So does anyone have any questions about the guaranteeing of the VA loan? So a lot of people think that you call the VA and you get a loan, but you actually get the loan from the lender, the mortgage lender, and the VA is just backing the loan. So they're insuring the loan for the bank or a percentage of the loan. So you sometimes will have clients that reach out to you and they'll say that they're talking to the VA, but 9 times out of 10, they're talking to Veterans United or some place that has veteran in their name, but they're truly just a lender like everyone else. And the VA backs those loans, a percentage, 25%. So they help to ensure to the bank that if the veteran were to default on their mortgage, the bank would get at least a certain percentage of their money back if there was a foreclosure to happen. When you use your VA loan, it must be for your primary residence. So you need to be living in the property. So whether it's one unit, duplex, fourplex, they have to live in one of those units to use their VA loan. If they move there and then they get orders to go somewhere else, they of course can move out, but their intent, at least for that first year, needs to be to occupy that property. All right, so being eligible, of course, you're veterans with certain amounts of service, whether it's active or whether it's National Guard or reserves, there are guidelines for all of these particular individuals depending on the time frame they served or if they went off to war or conflict. There are different criteria. So you may run into some of our older people who served and they may not feel that they're eligible, but they could be eligible. So always listen for those cues when you're working with clients, or maybe they have a hat on that said they served, or a jacket, or a disabled vet tag. So pay attention to that because that VA loan is going to be the best way for any client to go. Qualifying surviving spouse. So here's one that you may not see as much, but a qualifying surviving spouse is a person who has lost their loved one or husband, wife, however the spouse situation was. They lost them due to a disability that the government had awarded to them. So like my husband is a disabled veteran. So if my husband dies of sleep apnea, I can use his VA loan because sleep apnea is something he gets disability for. If he passed away, like, of course, in conflict, let's say I don't remarry, those are also stipulations, you can't remarry. So his VA eligibility would be open to me as a surviving spouse. Anybody have questions on that? And the thing is we do the work for you. So all you have to do is ask a few questions and then we'll do the legwork for you. You don't have to have them get their certificate. We're going to do all of that for you. So with the VA loan, there are several advantages. One of them is 100% financing. So no down payment in most cases and subject to qualification, of course. So in most instances, if that veteran has no open VA loan, they're going to be able to get into their home with zero down payment. If they have an open VA loan and they decide to rent that house, move into another home, they could still possibly qualify for zero down. So we just have to use the calculator that they provide to us. We don't have to manually do it anymore. But working with the knowledgeable loan officer to know these things and make sure your client is getting the opportunities that are afforded to them is what's important. If they are using their VA loan for a second use and they have one in place today, they do have to spend over $144,000 on their second use. Or if they have a defaulted old loan. So let's say you have a veteran and a spouse that divorced, and then the spouse kept the house, but the spouse said, I'm not paying for this house, I'm gonna let it go back, can't afford it, let it go back. And then years pass and the veteran wants to get a house again. Well, they think they can't get a house because they do have a default with the VA, but they likely can. So we can still run their eligibility through and see what amount they qualify for. They would just have to meet that $144,000 purchase requirement that would be set. So again, working with someone that's knowledgeable is where you're gonna win. All right, additional outstanding advantages, no monthly mortgage insurance. So whereas on just about every other loan, unless a client puts down a significant amount, they're gonna have mortgage insurance. With the VA loan, you do not have mortgage insurance. You do have something called a VA funding fee. So that is an upfront cost that is added to that person's loan. They have the ability to pay it if they'd like to, but it's really, again, no big deal. They could just add it right into their loan. It's not gonna add that much to their payment, but this money basically goes to the VA to build up that fund and basically insure that loan for that lender, right? So any type of upfront funding fees, mortgage insurances, monthly mortgage insurances, it's important to note that these things do not protect the client, they protect the bank. So those are things that we need to make sure clients are aware of. It's not insurance for them, but it's insurance against their default in the future. Hopefully they wouldn't have any.
I
So
had a quick question.
yes, ma'am, go for it. Hi,
You
Nicole.
said you said the VA funding fee goes to the VA for what reason again?
So goes into that insurance pot and it's going to, because they're not putting anything down, it's
Hmm.
guaranteeing a percentage of that loan, 25% for the bank.
Okay.
Mhm. So it's basically like a little bit of a premium in the event that they default. It's kind of like when we pay on our home insurance and we're paying monthly, and let's say you live in your house for 2 months and then a windstorm comes, well, you only gave your insurance company $400, but now they have to put a $10,000 roof on your home. So that's the best way I can explain it right now. Daniel, do you have a different way to explain it?
No, I think that's fair. It's just
It made
it
sense.
helps,
I was just writing
yeah,
it down.
helps
Okay,
kind of defend and also fund the program.
okay, awesome. So that's a VA funding fee. That's the title of that. And then the VA funding fee is waived for veterans who are disabled. So if they have a minimum of 10% VA disability, that funding fee is then waived for them. So the first time that the two first times, is that a such thing? It's not. So we've used our VA loan twice, and in both times we had funding fees because my husband was still active duty. But if we buy a house today and use our VA loan, then we won't have a funding fee because he's now a disabled veteran. The surviving spouse. So remember that surviving spouse uses that VA loan because that veteran died of some disability warranted by the VA. So that same waiver passes down to that surviving spouse. And then you have that active duty member who has received.
Yeah, go into the back and then. Okay.
Okay, so these are the three reasons that the VA funding fee would be waived. All right, limited closing costs. So additional advantages. Seller contributions are allowed. So there's up to 4% for the funding fee, the prepaids, and for debt to be paid off. But there's actually no limit on closing costs that you can request for your veteran. So even though 4% is kind of like the historic thing that you hear, and I probably even said it myself, to be honest with you, but there's no limit. So now that we're in these crazy times with higher closing costs and discount points and all of those things, as long as those things are warranted and are properly done and not overly charged to that veteran, we're able to ask the seller to pay those closing costs. So I know, Miss Jackie, with your sister, that was kind of a situation. It was, I think it was, no, it wasn't 4% even actually on her house, but it was teetering on it, right? So if you have a person buying a $100,000 house, just for an example, 4% is only $4,000. Well, that ain't even scraping their closing costs these days, because their homeowner's insurance can be about 1,800 of that 4,000. That leaves hardly anything else for all of the other costs that are involved to purchase a home. So closing costs, it's a little bit different these days. So get a little bit uncomfortable, you know. And Daniel, you have something? No? Okay.
I was just gonna, because I run into even a lot of loan officers that work on mortgage that aren't aware that you can use on the 4% side. So, because talking about, using the unlimited side to pay for the closing costs, and that's awesome. But a lot of people don't realize what she has here, that you can use the 4% to actually pay off debt to help a veteran qualify, which is unique to VA. Can't do that with a conventional or FHA loan, and that frees up a lot of flexibility that in a lot of cases people don't know we have the ability to do. So that's an awesome tool right there.
Thank you. And that can make a big difference these days too, because a lot of people, they're kind of pushing their DTI some, or most of you all are in Arkansas, so I'll just speak to y'all right now where you don't have to worry about the spouse's debts or credit. Where in Texas you do. So in Arkansas, y'all have a lot more room to get people approved, to be honest, because you can separate out those borrowers even on government loans. Let's see here. All right, the hunt team, that's us. We can guide you through your options. So I really love the way that we're doing things now. I think most of you have experienced it, but inviting the realtors onto the calls and the Zoom meetings that we're having with your clients, because it helps you become more knowledgeable of what's going on and help you see that we're doing our very best to get your clients into their home. All right, so let's go through. We're going to skip over this one. It's talking about interest rates, just saying that VA loans have a more competitive rate compared to other loan programs, and that is a fact. All right, VA for purchase, excellent benefits. So we have 100% financing, limited closing costs for your veteran, no monthly mortgage insurance, no loan limits, and competitive interest rates. So these are all just a recap of why you would want to encourage a veteran to use their VA loan if they have one eligible. VA Streamline Refinance. So this is something that will probably be used here in the next year and a half as we see rates come down. So for those who we help with VA home loans, they can easily refinance with a VA Streamline Refinance. They don't have to go through all the rigmarole of all the documentation and full underwriting process. They need to be paying their payment on time every month, and keeping things consistent there. That's going to be the main thing that we're looking at when we do a VA Streamline Refinance, that they are still employed and that they've made their payments on time, and that refinancing would have a benefit to them. So it's not good for each person, but it is good for some. So a VA Streamline is a VA to a VA. So they have to be in a VA loan and just streamline it right over into another VA loan. And we have to make sure that it's an advantage. So there's programming that we use to make sure that it meets the guidelines for the VA Streamline so that people are not taken advantage of. Let's see here. Here's the next one, the VA cash out refinance. So here we go, guys. So in Arkansas, you all can use VA cash out refinance. So if you have a veteran that's living in a property currently, you might have an old client from years ago and they're a veteran, or they're not even, or they haven't used their VA, they can still use their VA loan to do cash out. So if they have a conventional loan, an FHA loan, and then they realize, I have a VA loan available to me, they can do a cash out on their property using their VA loan. Cannot do that in the state of Texas, but you can do that in Arkansas. Anybody have a question about the VA cash out? Okay, we'll keep going. All right, documents required for the VA loan. So one of the first steps that we do is we place your client's information into the VA portal. We're able to pull out their certificate of eligibility pretty much on the spot. There are a few times that we have to put in a full application, and at that time we have to get that client's statement of service or their DD-214 to show that they've retired or separated, or we may have to put in an awards letter that shows they have a disability percentage. And we also sometimes have to put in an old closing statement. So let's say they sold the house a couple years ago and it never was updated in the VA system. We'll ask them for a copy of their old closing disclosure. We'll upload that. In about 2 to 3 days, we will get a reply that they have their certificate of eligibility available to them. So one of the things that we do on my team is we make sure we have this in place before we send you any type of pre-approval letter, because some people think they're eligible for a VA loan and they may not be eligible for one reason or the other. Could be how they got out. Maybe they did not get an honorable discharge. Maybe they were a few months short of service time. Some people will attend basic training, and then for whatever reason, they'll get out so they don't have enough service time. But we'll do the work for you. You don't have to guess about that. All right, your hunt team, answer your VA loan questions, help you obtain your COE, and guide you through the loan process. So one of the really cool things about you all and what you do is we are an extension of you. We are an extension of your team. So if you want to promote yourself as knowledgeable in helping veteran buyers, you can do that, because you have the tools surrounding you to make you knowledgeable and to help you get what you need at a moment's notice. And that's what we always want to be for you, is a part of your team, and just be an extension. And that's what Daniel is for me. So even though Daniel is my operations manager, he helps me know all the things that I don't know. Hallelujah. Thank you, Jesus. Yes. Somebody take up an offering. All right. Jackie. All right, so we're actually down to the last few slides, and this again is just a little bit about my background. But when you're talking to veterans and you're letting them know, hey, I want you to work with Miss Tomekia. She is my loan partner. She's on my team. She takes care of my clients. She too has military service as a spouse. Her husband is retired with over 20-something years, Lieutenant Colonel, disabled veteran from the state of Arkansas, right? So you can be proud to introduce your loan partner and know that I will take care of them, because I do know what they have gone through, because I have been through it myself. So these are just some of the key, right? So we live to keep going, but use our experience to help others. That's so important. How are we different? This is awesome. So we listen to you, assess your needs. We listen to your clients, assess their needs. So, and then from the front end and just building relationships with you as a realtor, understanding how you work and how you want to be worked with. So that's our job. You guys are our clients, and we want to serve you in the way that you need us to serve you until we earn that trust. And then we can just kind of have our own ways, right? We can just do our thing.
And you guys did such an awesome job.
Thank you, Phaedra. You rock. So we close loans quickly. We are efficient. We are process driven, but we are problem solvers, y'all. So we put our heads together. Our underwriters want to close every deal that comes in the pipeline. They are looking for reasons to say, yes, I can. Yes, we will. That's what our underwriters do. That's what we do at Cross Country Mortgage. And that's why I love it so much, because we are looking for the how can we? When will we? So it's never a no. It's always a when or a how or get your butt in gear. It's one of those. You know, I had to check somebody this morning on the Zoom. I was like, sir, you're not listening. And he just talking. And I just shut up. And I waited. It's like, you wasting my time. Are you going to listen? So these are like, we have to work with people how they can be worked with, but also not to waste your time. We want to work with serious people. And that's why we work closely with you, because it takes two of us to kind of hold it together. This is a triangle. We call it the triangle of trust. I've talked to y'all about that. Y'all know that triangle. All right, I can't even read up here at the top because it's covered. But anyways, we can make you guys some posts if you would like it. For those of you who are on, if you want to share that you work with veterans and kind of get amped up for Memorial Day or anything coming up, we can make you a post that you can share online to try to get that conversation going and help you to serve more veterans. So if you would like that, please put it in the chat and we will be happy to get that done for you. Mr. Mance, how are you? Lorenzo, Josetta. Okay, do we have anybody else from Texas? Miss Smith, you're Texas. I didn't realize we had some Texas people on.
Yes, ma'am.
Yay! Okay, so let me just share a quick, like 2 seconds on Texas veterans. So because the state of Texas is a community property state, it helps our Arkansas people too, because y'all share, you know, referrals across states. So, but since Texas is a community property state, right, we have to take into account the spouse's debts as well. So let's take me, for instance. Why not? Okay, so we bought our first home in Fort Hood, Texas, right? Fort Hood, Texas. I was not employed. My husband was employed. I was looking for employment. But when he married me, I came along with the car note, right? It was like $220. I'll never forget it. Mazda. Yeah. All right. So my husband's credit was ran, my credit was ran. In Texas, it's community property. So his income had to be able to support his bills and my car and this house that we want to buy, because I was not employed. So that's the difference in the state of Texas. So let's say that Tomekia also came along with some derogatory credit. Uh-oh. The state of Texas, that causes a problem. So when you have people who are estranged and they are separated and all the things, and they're not honest with you, the state of we got to get down to the nuts and bolts. So it's so important to ask people, you know, are you married, legally married? You're filing your taxes together? Like, is there anything that would bring attention to the fact that you are married? Because that will cause problems down the line that we need to catch up front. So that's my big emphasis for our Texas realtors that are on here.
Can I add a note to that, Tomekia?
Absolutely.
More recent change, maybe in the last couple of years, they have allowed some flexibility to use, specifically in community property states like Texas, to use they call them a non-purchasing spouse, the spouse that's on a loan. If they've got some income, we can now use that with VA loans to offset some of their debt and help them qualify. And that's relatively new. Maybe the last couple of years they made that change, which is it's a good one.
It is.
What was that called? A non-purchasing?
Non-purchasing spouse. So let's say that that I wasn't going to be on the loan. So in our case, I was on the loan. So my credit was really strong, right? So I was on the loan. That boosted our ability to get approved. But let's say my credit wasn't good. He still had to cover my car note. But let's say I could show like proof that I am working. I've been paying my car note.
Okay.
Then it could offset the car note.
Okay.
With enough documentation is what Daniel's telling us.
Thank y'all. Thank y'all.
Absolutely. So let's go back to the couple of questions. And while we do that, if any of you have any other questions, please get ready to ask those. So Miss Stephanie, you asked about loan interest payments, and I'm wondering if you're meaning interest-only payments. Miss Stephanie, is that something, can you come off mute?
Yes, yes, sorry.
Interest-only payments?
Yes, that is correct.
Okay, so
Correct.
today's financial market, if you want to think about it that way, your VA loan is going to have your normal principal and interest, property tax, home insurance. If your home is in an HOA or POA, some of y'all have POA, we have to take that into account for what they can qualify for too. I would also like to add, y'all, like with VA, there's no true credit score requirement, right? There's no true credit score requirement. And the debt to income ratio, we'll take what will go through the computer system, which is normally up to about 57% DTI. So it's pretty good that way. So there's a little bit of room with VA loans, and then when they have reserves, you know, that helps to offset if they have a little bit poorer of a credit score, or if they have some kind of situation. I remember last year we helped a veteran that had over $200,000 in medical bills, and he had not foreclosure. It was where his house had went into, oh goodness, modification. He had loan modification. But he had had cancer, his wife had had cancer. So they had to be out of that modification for a window of time, I think it was 12 months, have good, clean payments. Of course, their credit wasn't great because that $200,000 of medical bills. So even though medical bills are not normally required to be paid off on government loans, they still affect your credit score. So that's one of those things that, oh, you have to worry about medical bills, and sometimes you don't. But they're gonna pull their weight as well. They're gonna play into your actual credit score. That was a good one. Okay, what else do we have? VA home inspections. Ms. Phaedra, that was yours, right? VA do home inspections. And I think
Yes,
that
ma'am.
you know, again, in our language that we use, we get so relaxed. And I know I do, because I draw pictures a lot trying to help people understand things. So my language is not always correct. But VA does not do an inspection. They do they have licensed appraisers or appraisers who are licensed to do VA. So just a few appraisers, right, that are licensed to do VA, just like underwriters. Underwriters have special designation to underwrite VA loans. So not all underwriters underwrite VA loans. And not all appraisers can do VA appraisals. But they do not do inspections. The things they look for, though, are safety things, right? So if that home has stairs in it and no rails, if that home has rotted wood, I'm trying to think of one that gets called out a lot. One that gets called out a lot is when people have that bonus room upstairs, like over the garage, and it's got the stairs to it, but it's got no little rail, like no little wood rail from Home Depot. So that one gets called out a lot. But normally when we're working together, y'all are telling me, hey, this is what I'm seeing in property. Do you think this is gonna get called out? So, but they're looking
Texas,
at safety things. Go ahead, Daniel.
I was just gonna say Texas and Arkansas are lucky enough to be in the short list of states that do require wood destroying insect information on VA loans.
Oh, yeah, yeah.
That speaking in terms of inspection stuff, that is something that applies to both Texas and Arkansas, as we do need that pest inspection.
Yep, that's for sure. So Daniel, Arkansas, they do termite on every deal.
Good.
I think I've done one deal without termite, and it was like a for sale by owner, but in all my years, they do
Oh,
termite.
even the non-VA stuff you're saying, they'll make
And
sure
what
the
they
term
don't do
there.
is surveys on every deal. So they don't do surveys, which Texas, we have to have a survey. What other questions can y'all think about? Or think of, anything at all?
I have a question.
Yes, ma'am.
If they are VA and the VA covers your medical, if you go to the hospital, how did they end up with medical bills?
Good question. And it could just be a lack of their follow-up from when documents come to their home, disputing it. So that's a really good question. And now that you say that out loud, though, I don't think that he retired or got disability from the government. So his VA utilization was from whatever service, then he separates. So you know how they'll separate you and give you like a check, but they won't give you any more VA benefits. You lose your card, you lose everything. And I believe that was his situation. When he got out, he wasn't instructed properly on how to get out. And then later on in life, he developed the cancer because they're in their 60s, both of them.
But they still qualify for a VA loan?
Oh, yes, ma'am. Yes, ma'am. So you only have to, I think it's 18 months active service. There's different errors, like, you know, my age group, your age group, different errors, like World War X. It's a chart that we look at, and it tells you how much service time you need in order to be eligible for your VA loan. So you may have a reservist that normally it will take them 8 years or 6 years in the Guard. It would take them that long, but then they get called over to Afghanistan for 12 months and they just joined the reserves. Well, all of a sudden they're eligible because they just went to serve in conflict area. But let's say that same person gets out a couple of years later, they still have their eligibility available to them.
Thank you.
Absolutely. I was going to bring up the point that we do also manually underwrite VA loans. So a lot of entities will not do that. So we manually underwrite VA loans, which means that if their profile isn't strong enough to go through the computer system for an automated underwriting, we manually underwrite that loan. And we do not have extra layovers. So good thing about cross country, we underwrite to the guidelines and we do not have additional layovers. Anyone else have a question? Thank y'all. These are great questions.
Mika,
So
Yes,
this
ma'am.
is Stephanie. Oh, I'm sorry.
go ahead. No, you go ahead. Go ahead.
Oh, no, I'm saying yes, ma'am.
Okay,
Oh,
I
it was
wanted to go
you.
back.
Okay, I'm listening.
This is Stephanie. Okay, I wanted to go back to the question that I had about the interest-only payments. So my, I guess, clarification would be, is the one-time closing when you're doing a VA, temporary to permanent close or construction to permanent close.
Mhm.
What we were told was that the principal and interest amount would have to be included in the loan. You cannot just make interest only payments on the construction.
Yes. Is this for your clients from a few months
As
ago?
Correct, yes.
So VA does have a rule about that. So the interest is rolled into the loan. That's correct. So with our one-time close construction, the interest
Okay,
is factored into the loan. That is correct.
Which we don't collect any payments for our one-time close VA products. There's no payments collected during the build process. It's factored into the build cost. The interest-only payments are factored into the build cost for the build portion.
Yeah.
Does
And
that answer your question?
okay.
Go ahead, Miss Stephanie.
I'm sorry.
No, I was just
I'm-
saying, go ahead.
I didn't hear.
Oh, so the interest is rolled into, so when
I didn't hear.
can you hear me?
Okay, go ahead.
Okay, when your one-time close construction loan is set up, they estimate the amount of months it's gonna take to build that property up to about 12 months. And then they collect the amount of interest. So there's a chart again for that. And it's based on the range of construction cost. That's how much interest they collect. And then at the end of it, they rebalance or recalibrate everything. So if things aren't used, they apply it toward the principal and they actually end up paying payments based on that new balance. And the other really great thing about our one-time close product is that we do a float down. So even though your client closes at today's construction rate that's assessed in the construction department, when their home is done in 9 to 12 months, they have the opportunity to get a lower interest rate if the market has dropped. So our one-time close construction is amazing. They're phenomenal to work with. Anybody else have Miss Jackie?
Thank you. Thank you.
You too, honey. Yes,
Okay.
ma'am, Miss Jackie.
Okay. I just want to know, once again, so with a veteran user or veteran, they don't have to pay a down payment, but they do need to be aware of a closing cost. They may have to have closing cost fees.
That is correct. That's correct. So when
Now,
you're having your,
go ahead. Go ahead.
no, go ahead, babe. I was hearing you. Go ahead.
Is it different between a veteran and a disabled veteran when it comes to the closing cost fees, or is no difference? They just both have to have closing cost, or
They both have closing costs. The difference is going to be the funding fee. So if you have the disabled veteran, they won't have the funding fee. A regular veteran will, but remember that's added into the loan itself. So that's added in. So for a active duty veteran, let's say again, they're buying a $100,000 home, their funding fee is 2.15%. They're gonna finance 102. Okay, so they're gonna finance that 2.15%. So basically 102,150, that's what they're gonna finance. Now you can also combine down payment assistance programs with your VA loan. So we can still use down payment assistance for their closing costs. So if they see a home that they want and the sellers won't pay the closing costs or whatever, and their credit score is, you know, the guideline for the down payment, whether we're Texas or Arkansas, Texas 620, Arkansas 640, we could still combine down payment assistance with that borrower. If it will go through the computer. So when you're using down payment assistance, it's got to have that automated approval. It cannot be manually underwritten because we are selling these loans to the housing entities that, you know, in the government systems that provide these programs and monies.
okay.
That's
Okay.
a great question.
Thank you. Thank you.
Absolutely. And so what our goal is for everyone that we work with really is for you to do a consultation with your client and you write down all of their concerns and their questions, and you just continue to ask them more questions. Is there anything else? That is my famous line, right? Is there anything else? If you practice that line, you'll be good. Is there anything else? And you write it down. Is there anything else? And you write it down. And then you share that information with us so we know where to lead in, where the sore spots are for your client. Hey, so what happened last time you went through this process? Oh, it was in 2022 and we was just in a shaky marriage and da 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 da. So now you know it wasn't the loan officer, it wasn't the realtor, it was them. So you always want to find out because every client you talk to, 8 out of 10 of them have tried this already. Something didn't go right. If you don't find out what didn't go right, you're going to repeat. It's like putting a Band-Aid over a Band-Aid over a Band-Aid. So until we get to the source of what's going on with this client, what's important to them, and if you spend a few minutes and do that, you will get your check whenever it comes. It could be in 6 months, 8 months, 12 months, but you will build a relationship with that client. And that is what's going to get you to clear to close, the relationship. Y'all have any? Miss Nicole, you got a question? Miss Jackie, I'm about to send my cash out. I'm just playing. Y'all know I be getting too excited. Anybody got anything else they have for a question? I'm so happy to see all of y'all. And I'm so glad things are starting to pick up for everyone. Does anyone want to share a goal that they have for the last several months of this year? Have any of you all made a recommitment to your goals? Anybody? Recommitment? Hey, girl.
I am gonna make a goal to ask better questions with my clients. Let me see. That's what I can think of right now. I'm sure when we get off the Zoom, I'll probably have 10 that have crossed my mind. But for now, just
Well, I
to
know
ask
you, Phaedra, you have
better
had, and
questions.
I can just speak to this really quick, but you've had probably about this year about a 90% conversion rate or maybe more. So just about every person you've introduced this year and the way that you've introduced them and then allowed us to pick up and keep going, all of those people are under contract or have already closed.
Yeah.
Almost all of them. So I'm super proud of you. Like, I'm extremely proud of you. I really am.
Thank you. I thought about that. I
Congratulations.
get so wrapped up in what I'm doing. Oh, sorry, Stephanie.
Oh yeah. So y'all.
No, I was just saying congratulations to you.
Oh, thank you. Thank you so much.
Congratulations.
Yeah. And y'all have to find like the system that works for you. Of course, me, I can only share what has gotten me to being able to even have Miss Larissa or Miss Bailey. It's been processes and it's been following through on those trackers and things that I talked to you guys about. It's been all of that, doing what my manager and his manager says, following those instructions and being a good leader, but also a good follower, a good example. So I appreciate each and every one of you for trusting us with your leads because we don't take it lightly. Like, that's your bar of gold. That's what that is. So we thank you. We appreciate you so very much. And if there's anything we can do to assist you, we want to do that for you. But y'all, Mr. Daniel he's the mind behind it all.
Thank you. And I just want to say to just you and your team, I do feel, well, I know that since you and I have partnered together, like I feel like I'm a better agent. And I appreciate you for the ideas that you've, helped me implement to kind of, because I don't, at first I didn't really have, I was out here just working, and I didn't have enough boundaries. So I think since we've partnered together, that has made me a better agent. So thank you for that, and to your team, and
Yes, ma'am. Yes, ma'am. Well, we are always open to any constructive criticism and ideas because we want to be the best we can possibly be. And we can't do that without y'all's feedback. So y'all please give us feedback. Let us know if we worded something that didn't seem quite right. Like what is it? We invite your suggestions as well. We want to be the best we can possibly be so we can all get more referrals and help more people get into homes. I think that is it. Can anyone think of anything else? No? All right. Did we make it? 45 minutes?
all the other agents on the live. I hope you all have a prosperous rest of the year, and that's it.
I think you're going to get the cheerleader award, Miss Phaedra. Awesome. Y'all be blessed. Thank y'all so much.
Okay, thank you guys.
Thank you.
Thank you for joining, everyone. Have a good day.
Thanks,
Thank you, Ms.
Mika.
Nicole. Bye, Mama. Thanks, Daniel.
Right.
Thank you.